When you trade the open, you you basically have, or hopefully have prepared for what you are about to encounter. And most people realize that there is a huge amount of activity at the open and the close of the day. The system is set up so that, or at least primarily is set up to find the desired stock that you wish to take a position in the following day, and you locate that stock, do your preparation, and get ready for the opening bell. This is, of course, we're not talking about gaps. We're just talking about cycle reversals, because the day trading Visual Basics system is a system of cycle reversals. We find the bottoms and the tops of cycles, show you how you can also find them, and use that knowledge to your benefit. We started out doing that because we saw our desire for the system was to find market strength in movements. And so we were working in that area, or that endeavor, and we saw things move, and we eventually began to track them with indicator line length, because that's the way you see market strength, or at least one of the primary ways that you can see market strength is through indicator line lengths. But when you are preparing for that open, there are things that we often, or that we should keep in mind. At the bell, you're going to experience you're anticipating a green candle the next day, and you're anticipating taking a long position, and whatever traded overnight is instantly going to pop on the screen at the opening bell. And there may be a significant amount of additional activity as well at that point. And just because the overnight activity went down and then came back up doesn't mean that it could not go down again before it goes up. So, and when you trade, or at least when I trade, I always keep the daily window open so that I can look at the daily candle. And then I trade with a 1 minute or a 2 minute chart. Some people prefer tick charts or other types of charts, but whatever chart it is that you use, that you're going to recognize the same things that you recognized on the daily chart, those indicator movements occur on the 1 minute chart and even the tick charts. So you basically are going to find the bottom through the analysis of the sensitive indicators, and keep in mind, on a 1 minute or a 3 minute or 2 minute example, even if you miss the bottom a little bit and it's going back up, you're not going to be missing that much. So don't be excited about I know the reaction when it's your own money. The pressures of fear can get to people, and it's just not that important. Just recognize that you have secured a pattern that's a high probability pattern, that it's in all likelihood, even if it goes down and it starts back up and you pull the trigger to go in, and then it can go back down again, there's a certain point at which you're going to pull the plug and start over. But sometimes you can just watch it go down, because with a high probability, you know that it's going to go up by the end of the day. Also, you can have when we talk about the tails on candles, you can have. I mean, I've seen it where the candle, it was a green candle, it went down, it came back up, and I think within 20 minutes it hit its high of the day, and then just proceeded to bounce around there for a while and work its way down real slowly towards the end of the day. So the high the high of the day on a green candle does not necessarily mean that it's going to be at 2 hours before the market closes or some distance out there. It can happen anytime. But those are the key points that I wanted to talk about with you a little on trading at the open, because don't be fearful of what or anxious about it. It's really not that important. It is. I mean, that sounds like it's foolishness, but you're on a 1 minute chart, and the amount of value that's changed at that point is insignificant, because you're primarily dealing or attempting to deal with the major price movement of the day, and you should be able to recognize that with the sensitive indicators, you're capturing the changes prior to the vast majority of the people entering that same stock for the day. So just add it all together when you're thinking about trading at the open. There's lots of people that avoid the open simply because there's too much activity. But I disagree with that, because you need to go down to a fast chart, like a 1 minute or a 2 minute chart, and watch it as it hits the bottom, because it'll drop 6 cents or 9 cents, or I mean, they'll even, heaven's sakes, they'll drop $1 or $2 before they'll turn around and quickly go back up, especially if you're in high priced or high valued stocks. So we all trade, or seem to trade, in different ranges. Some people like the $10 to $30 stocks, and other people prefer more. It just all depends. And you'll go through different cycles as you trade. You'll be trying different categories to see which you like. And also, when you find a particular stock that you like, and it has good signals that you can recognize, mark that stock down, stick with that stock, trade that stock, because it may not always do that. It may have real nice cycle changes that you can see, and at least at this point in your career, and later on you'll develop your skills more effectively, so that you'll see cycles much easier. But if you do find one where you can recognize, stick with that stock. It's just a good practice to do that. Some people in the business say just grab a stock and only trade that stock for 6 months, and there's something to that. There's a value there, because you recognize how the stock operates. So, or at least take one stock that you like and keep track of it. You may not want to trade it all the time, but definitely keep track of it every day. What it is doing, and you'll grab some great opportunities by looking at one stock every day. So those are the few comments that I wanted to make about trading the open. It's important, because except for gaps, we use that time to pick the bottom or pick the top of the trade that we're going to be in for the day. So Have fun trading. I do not say that flippantly. If you're I mean, I've been a self-employed person for all of my life, except for a couple of jobs when I got out of college. And it's important that you have fun. If you're not having fun, it's a long day. So enjoy the videos. If you see the benefits of this system, make it a business, and study and analyze, because you'll do nothing but improve your knowledge, and especially your confidence.